I've been getting some questions about what my actual like entry model is, and I'm gonna just kind of explain some stuff. Um, and yeah, so I'm gonna just use this as an example. This is like some random ass day. I'm just in the middle of my backtesting session, but yeah. Um, so when I say like my entry model, like I don't limit order that much. Like I'm not just like placing random ass limit orders like this. I'm not doing that. I have levels that I have marked out. You can see like these deviation levels. I always never limit deviations. I don't really ever limit OTE as well because most of the time it's just too big of a range and stop loss ends up being too big anyway. So I'm gonna just get into some shit. So basically, when I'm looking for a trade, right, I'm looking for one of my levels to get. So say I'm looking for shorts right here inside of this range. Okay, so we have this entire OTE range right here from the last time we delivered lower. We have these highs inside of here. Sweep out these highs. And what is the last close, the last bullish close before we sweep the highs? It's this candle. So basically my entry confluence would be a close below the last bullish candle. So like a CISD, but only on the 1 minute or whatever time frame I'm trading on. So obviously this is a bad example because my stop loss would be 150 points. But that's kind of what I mean when I mean my entry model. So just get into an example here. So right here, what I have marked out is, look at this hourly chart. We can mark out OTE, this range. But if you look at the hourly time frame, we're clearly just delivering towards these highs over here. Alright, delivering towards these highs over here. We swept out this hourly low, swept out these lows. The only thing would be these lows, but at this point, they are fairly far away, like 400 points. So what we do have is a 1 hour buy side imbalance or sell side imbalance right here. And what we can do is the first time that we put in a low, like right above it right here, you can see this. And this goes hand in hand with something we'll talk about, which is candle range 3 CRT. And what happens, we put in that low right above, put in a few actually, put in basically equal lows right here. We sweep it, and then we make equal lows, and then we re-sweep it. What can we do? Mark out our manipulation leg from here, from a wick low to the body high of the highest wick of the manipulation leg. And what do we see? We have this high right here, which is a data high, news high, whatever you want to call it, CPI high, whatever. But you can see that we have the 2 deviation lineup right at that high as well. And then we have 3 deviations right above this high as well, which would be the top of the low resistance liquidity because it didn't sweep anything. So we're going to be targeting higher. So what can we do? We can look for some sort of entry confluence. This is market open right here. Market open. So market opens, we immediately manipulate lower, get that Judas swing. Now we get this 1 minute IFVG. This entire thing would be a zone that we want to take longs from. So until this gets proved wrong, which would mean closing below this low, at least on the 1 minute time frame, we're going to be looking for longs. And then when we do close below this low, if we did, we could target this low and then eventually this low, these lows way down here that I was talking about before. So let's see what happens. We get the IFVG. Now we just wait. Oh, and there you go. This is the exact thing that I'm talking about. We resweep this internal low, turtle soup. It doesn't even need to be inside of a PD ray. The PD ray would just be this 5 minute rejection block, not a fair value gap. You can see, mark out this. The low lined up right below CE of the rejection block. Mark it that the OTE is basically OTE of it. You can see we come down, turtle soup it, and if you look at the 5 minute time frame, it would be, oh no, sorry. If you look at the, actually this one doesn't show CRT, but the CRT actually did print from this 5 minute to this 5 minute, but basically I wanted to talk about entry confidences, and basically you can see we close straight above this right here, this candle. So what can we do? Take our entry off of that. You could even take your entry off of like the first time we rejected it on like 30-second time frame. That'll give you better entries and lower RR, or better entries, higher RR, but your win rate will be sacrificed a little bit. But you can see we can just target the 2 deviations. That's going to be our first target for everything. You could also leave runners up to the -3, which is the full low resistance liquidity. But basically, when I'm using this as my entry model, I'm just running my stop loss at the body low, not the wick low, because this candle, we shouldn't revisit this low anyway, because this was the rejection block. This held the rejection block, at least for this one. So we shouldn't revisit anything below this. And then also you can see if we mark out this, our stop loss is below the 0.79. So let's just see if this plays out. And a lot of people ask me, like, where do I go break even? Why do I go break even? Whatever. Most of the time it's just at the -1 or somewhere on the VWAP or one of these highs over here. I don't ever really like go break even like at these highs because they're so close to me. Like, if you look at the trade, it's to my break even, it's 50 points. To my take profit, it's 216. That's only 1/4 of it, right? And having my break even there would basically be me having a 1 to 1.2 or something as my break even, and I don't want that. So what can we do? We can wait for a sweep of the high that we do put in the first time. So then after this, we could go break even, or most of the time it's just like whatever lines up with these deviations. So I'd like to use this as my break even, but what can we do? Mark out this high, we resweep it, then you can move your stop loss to this low or break even, whatever you feel more comfortable with. Just test it and you'll see. But let's see if this ends up playing out. There you go, there's my break even. And oh, there was like 5 different entries within that, and bang, there you go. Full TP. See if it ends up running these highs with the -3. But obviously this is where you could possibly take shorts from these deviations. That's why I take profit there. And you can see shorts end up playing out from there. So pretty simple. That's just a little bit of my back testing session, and just to answer some people's questions, because a lot of people are asking like what my entry model was. Don't have like a fixed entry model. Just if I like a rejection, I'll take it, because the way that I trade is just high time frame continuations with low time frame reversals. If you look at this chart on the higher time frame, we're going to be bullish because we swept out these lows over here. We're going to be bullish up until we sweep out these highs up here, the internal highs. So on the low time frame, this looks like a reversal. On the high time frame, it looks like a continuation. That's how you get high RR, high win rate, or high RR, decent win rate, and high trade frequency. So hope you guys learned something. I'll have a couple more videos of my backtesting sessions up soon, and yeah.